Now, when it comes to doing business, two key challenges stand out: acquiring assets like machinery and the manpower they need. When it comes to the race to net zero, small and medium-sized enterprises often face a capital or expertise ceiling that keeps them from embracing greener operations. CNA takes a closer look at how sustainability-linked loans are helping to streamline SMEs' decarbonisation journeys.
This Singapore-born laundry service, Olo, has been around for 8 years. But as their hospitality clients became more selective about working with eco-conscious suppliers, Olo had to turn around its operations to meet their needs. While smaller green steps like switching plastic hangers to more recyclable ones are more manageable, bigger moves like investing in an electric delivery fleet don't come cheap.
Last year, we spent about 20-30% of our expenditure on all these sustainability programs. I think this year we are expecting a lot more. And based on our projects that we are going to put in, I think we are expecting about almost 80-90% of the expenditure on all these sustainability initiatives.
It's a colossal investment, and Olo is not alone. The Association of Small and Medium Enterprises says that many SMEs are adopting a wait-and-see approach due to large upfront costs, especially for infrastructure projects like installing solar panels and water recycling. There's also the matter of complicated certification processes and cloudy long-term returns. ASME says it's really about profit and loss in the shorter term.
The challenge is really that for many SMEs, we have to look at the immediate P&L, the next quarter or this year P&L, right? And in these times, sometimes for many, we are very sensitive towards the costs.
Sustainable financing is one way banks are helping SMEs overcome cost barriers. And some banks, like OCBC, even go beyond loans to help SMEs achieve certification targets and navigate the complex transition landscape.
Most SMEs are short of resources and time. That's probably the biggest challenge that they face in their desire to go green. So what we've done is to work with them, make it a lot simpler, create a framework that takes some of the hassle out of the equation, breaks it down into simple questions that they can deal with.
OCBC says that uptake of sustainability-linked loans has jumped, going from just one SME in 2022 to 24 SMEs last year. Broadly speaking, the uptick is slowly but surely coming along. DBS tells CNA there's more interest from SMEs in green, sustainable and transition loans. But the majority of their financing up until last year went to large and mid-sized corporations. UOB says about 54% of their total sustainable financing last year went to local SMEs. The loans are especially important now, as SMEs like Olo, which have received funding from OCBC, say current economic pressures from rising energy costs and inflation make the support timely.
I think it's a good initiative by the Financing Institute that they are coming out with all these initiatives to help SME to be more focused or putting in correct resources onto the green initiatives. Comparing the current interest rate, I think is also a good significant saving.
There are also grants that help to defray other energy and manpower costs, as well as to train and retrain the green workforce. But for smaller businesses that don't have a lot of room to maneuver, the cloudy prospect of long-term returns remains more a luxury than a priority.